Welcome back, everyone, to our channel. I'm Doug, the Retirement Guy. Happy Wednesday. Today is Yieldmax Wednesday, which is Yieldmax Weekly Dividend ETFs Review, where we review all 10 of the funds. We give you the vital information. We give it to you before the press gets it out there. We try to give you all the new dividends. You can buy them before the X date, so we give you a ton of information. We try to do this every Wednesday. And if you're on our Patreon thing, they normally have this by 8 a.m. every Wednesday, so you get all the information ahead of time to make some brass, nice decisions. Hey, if you're not a member, if you're not part of the club, don't be afraid. It doesn't cost nothing. Just go ahead and hit that subscribe button, hit that bell notification, get notified every time we send out a video. And we just try to do this stuff to helpfully grow your pocketbook, grow your portfolios, give the information to keep you out of trouble. Now, anyone else, the Patreon guys, welcome back. Patreon, you can support the channel. It's all free over there, so you can get some free information. And then if you want, you can always support the channel with a small little donation. We appreciate every step of it. Let's get into today's video. Notice to all viewers, past performance does not guarantee future results. This video is for educational and informational purposes only, primarily for educational side of it and for your entertainment. It should not be considered financial advice. If you do need financial advice, ask a licensed financial advisor or professional before making those financial decisions. So let's start off with the weekly pay ETFs, the growth of the funds. So now we don't expect a lot from the Yieldmax funds overall for growth because a lot of these things are built for truly just built for income, income. Because most of them are selling covered calls or covered puts, and that capture upside so that you don't see the massive increases that other things have seen. So we look at this right now when we see a big one like LFGY is up 3.11% in the past 1 week, up 9.78 for a 30-day growth. That's a solid gain. So they're up to $37.82, and that's well above their 4-week average of 36.41. The second one that we look at, again, we look at these and we'll see a 0.63. That's actually something we're excited to see. And that's going to be the AI package from GPTY. This thing's up slowly, steady, just climbing 47.59%. It's up 8% over the past 30 days. So you're looking at those numbers in 30 days. Yieldmax has had a decent month. This one, again, is up and over its 4-week moving average. And it's still down, though, for the year to date. But like we said, it's slowly recovering. Most of that attack all came from the April 2nd tariff program that we're trying to recover from. So then the other two that we're gonna put out there, and just so you guys can see it, are the big popular ones, and that's going to be the ULTY, which you can see was flat this week, and it's been flat for the past 30 days. So actually, we're going to cheer and exciting about that it's been actually flat for the past month. Salty is one that we've been keeping an eye on across the board. You guys can see this thing is slowly having its drop down. I really think you guys need to be focusing on that one. It's down $3 below its 4-week moving average. It's down $2 over this week. It was the biggest dropper that we've had for the week. And I think Salty's kind of finally adapting and understanding how Yieldmax does it. You start high, you end low, and then you invest into it. So here we go. It's another roller coaster ride from Yieldmax. Not being negative, it's just salty as it was exactly what we expected it to do. It's the ultimate short option, and we expected it to drop down. So overall, I would say not a bad week because we don't expect much from the growth. So just give you guys some hints in there. A couple other ones, the YMAX, it's up a little bit. It's flowing. It's again, that's another steady pace program. Well, let's take a look now at the dividends. I know this is what everyone's really looking for. So let's give you guys the hint of the dividend payouts for this week. As we look at it, the number one paying out dividend is going to be SLTY, which is better known as Salty. That one's going to pay 0.87 cents this week. Now that is down from the 63 cent last week, so we're starting to see a decline slowly of their dividends, but still the biggest one of the week. The number two went to LFGY, the crypto program of 51 cents, down from 40 or up from 43 cents. And then we have CHIP, CHPY, the semiconductor program, up 2 cents to 43 cents for this week. So some solid dividends across the board. We're only out of 10, 70% are up and 30% are down. I know everyone's probably looking at the really bottom is ULTY. What's that coming in at? Again, it's coming at a set 9 cents. And what we also have done with this sheet, I want you guys to, I don't want to really confuse you a lot, but we added the average dividend so you can see what is going on. And we'll go, let's just use number one big boy of ULTY. Last week it was a solid 9 cents. This week is a 9.04 cents. And then the average that's rolling right now is 9.5 cents. So we can kind of give you an idea and say, yep, they're right in the ballpark. Same thing with SLTY. Their average now is 61 cents. So at 60 cents, that's right pretty much in the ballpark. What I'm looking for here, okay, let's go to CHIP and we'll use CHIP there. They're at 43 cents. Their average dividend is 39 cents. So it's above average. Nothing spectacular. And that's the thing. I don't see anything really crazy out here that's way over whack. So I think it was just a normal week. The only one I can really give you is going to be the YMAG that's at 20 cents. Last week it was 10 cents. And their average that they're using is 14 cents. So, it's right. I think it's just making up for last week. So overall, I'm very pleased with the dividends coming out of all these. Distribution rates, ULTY still is going to be number one at the 85.45%. With Salty coming in at 78.98% and LFGY at 70.45%. So some solid returns, realistic numbers across the board. And, these are all high yield, so they do bring some risk to the table, but your risk to rewards are very strong. Look at the YMAG at 69, YMAX at 58. Their Russell 2000 is 42. So there's some serious numbers there. The return of capital. And remember, this is not a negative. This is not a positive. This is kind of what a lot of these use for tax purposes, tax advantages. Watch the video that we have out there if you don't understand return of capital. We have a great video out there on the return of capital, and it'll explain this completely. So we look at it across the board, and yeah, they're using some 100% ULTY, SDTY, the S&P 500, QDTY, the NASDAQ 100, and the crypto LFGY, all used 100% this week. So, nice kick the can of the taxes down the road. So across the board, fairly well mixed. YMAG again, 0. I love seeing that one for times. But just a lot of information right there on the screen. So very pleased across the board with the dividend side of it. So now let's get into the weekly pays, the dividend return percentage. Now, some of you may be questioning, what is this? What is this that we have? Well, basically what we're doing is we're taking the price of the share this week and taking it and dividing it by the dividend price so that we can really see what kind of percentage of the price are we getting back in dividends. And we're going to use this one for the example is going to be ULTY. This is what we call our cash cow. This has been a cash cow for weeks on top of weeks, and it's actually the pillar that we use as the benchmark. So every week you see this thing pretty much bouncing around that 1.6 to 1.7 category of the price of the stock of the dividend. So that means for every $5.50 in you have it each week, you're getting 1.64% return back of that money. And that's a solid return. So if you can beat 1.64, you are now the cash king. You are doing more income from the money invested. So just getting us the maximum part of return or maximum part of income from an investment. And this is what we're here for, right? We're here to get the most bang for our buck. So ULTY wins this one right now at 1.64%. Number two comes in at SLTY at that $40.20 price point, giving a 60-cent dividend. They're at 1.51. And then number three is going to be LFGY at 1.35. And YMEG comes at 1.34. So what do I use this for? What's this all about? Well, what we're trying to do, as I said, I will look at these things and I will say, look, if I put $40 out, I'm going to get 60 cents back. It's another way of calculating. I'm getting 1.51 return on my money. If we find consistency like we do with ULTY, then park your money there and you're collecting 1.64. I'm going to put it in a different way. You could actually see that you're almost getting 1.64 interest, I'm going to call it, on your money. It's another way of thinking it. I'm just trying to give you ways of thinking it. It's not the proper terminology, but I'm trying to give you ideas of how to think of uh, this number for you. So if I'm getting 1.64 per week times that by 52, we're getting a 52 plus, almost a 75% interest rate on our money. Just a neat way of looking at it. It helps me a lot with the investments of making sure we're getting the maximum amount of return or income from our funds. Okay, so those are the four that I would be definitely heavily looking at. Our next one is going to be the return on investment. Now, if you guys are not familiar with this, we've covered it many times on the channel, but if you're new, I'm going to go over this. Basically, what the return on investment is, this is the way I buy a ton of my investments, my stocks, and everything else, is if I'm going to put $10 into a fund, how fast am I going to get my $10 back from dividends? I'm not looking for growth. I'm not looking for any other factor other than giving me cash back. Because if the fund goes up, doubles, okay, I have to sell the shares to get my money back. So I'm not really as far advanced as I want to be. Um, I want just to know how quickly I can get my money back on the investment that I make. Now, when we get the weeklies, I'm always wanting to be into a basically 1 year and less. So when we take a look at this now, we come across there is not a single one out there that is in 1 year or less. Because if we were in 1 year or less, it's almost to me as a no-brainer. Invest the money, be done with it, and walk away. So the best one that's on the board is actually ULTY. If I took and invested $5.50 today into the fund, the average dividend price is 9.5 cents. That means it will take me 57.5 weeks to get my $5.50 back, which puts us basically about 1.1 in years. So it's not bad. But what I don't, but the goal that we set is always try to be under 1 year. So what you don't want to have is something like SDTY, the S&P 500. That one there, you're putting $45 into the fund. You're going to get 20 cents basically back on average. That's going to take you over 4 years to get all your money back. That's a long time to wait to get your money back on investments like this, because that means 4 years of watching a dividend average. Does it go up? Does it go down? What happens? That's 4 years of just environment, just 4 years of government, 4 years of everything that's going to take and change. So that could change every one of these parts. That's why we want to get in and get out as quickly as we can, so that we can turn these into what I classify as hardcore, true cash cows. So just imagine if you put $5.50 into it and waited 57 weeks. You got your $5.50 back in your pocket. You still own that share of ULTY, and you're still collecting that 9.5 cents dividend average every week. So all of a sudden, you just got a cash cow that's just pouring in money for you week in, week out. That's how I use return on investment. That's how I buy my new funds. I do new investments across the board. It's just a unique way of looking at things. So across the board, like I said, ULTY is number one, SLTY is number two at 65 weeks, and then we get into the number three, which is going to be LFGY at 1.48. So now let's get into the total returns. And this is what I always tell everybody is the very first thing you should always be looking at is what's the total return of a fund. So don't sit here and brag and tell me I'm getting, 85%, 100% from a ULTY or this fund or X fund. It's what did it cost you? It's like going to casino. It's like going to Vegas. I won $1,000 in Vegas. Well, what did it cost you? Well, I went out with Vegas with $2,000 and I come back with 1,000. So technically I didn't win, I lost. And that's the same thing with the total returns. So the number one total return is actually our semiconductor chip, CHPY. That thing has got a total return of 61.15%. This is the number one most, giving you the most return on your buck. You have a distribution rate of 38.83%. You have a total year-to-date growth of the fund of 22.32% for a 61.15. The next one on the list, YMEG, that Magnificent 7, has had a great distribution of 69.85%, and it's been able to cut its year-to-date losses down to 18.85% for a 51% total return. And right now, SLTY. SLTY is looking at a 78.98% distribution return, but they have a 28.84% loss to put it at 50.14%. Now, I know everyone's going to ask and questions going to go to what's ULTY? ULTY, 85% distribution. Awesome dividends. But they've lost so much of the value of the fund is down to 47.47% year to date. That means they have a total return of only 37.98%. Still a great number. Still phenomenal return. But once we get those year-to-date growths out of the way, which we're seeing with this thing just parked at the bottom around that $5 plus range, you're going to see probably early next year, you'll see this thing back down to big, big returns. And that's what we're preparing for. Will we see a big drop off of ULTY, or will we see it just staying steady, or will we start to see an increase? We've done a review onto it. We'll probably end up being another review, I think is scheduled later on this month. And just seeing what ULTY's plans, futures, and all that is. And I think you're going to enjoy that one. So let's go with Doug's top 5 picks. Who are we looking at this week? What's going on? We've given you all the information. Now we're going to take 10 and dial it down into just 5 for you to focus in on. Will these fit in your portfolio? Will they not fit in your portfolio? These are not Doug's suggestions to buy. I want to clarify this. We've kind of changed this a few weeks back. These are ones that we are investigating. We are doing research. You need to do your own research to see if it fits your portfolio. Does it fit your trading ideas? Does it fit your risk factors? We just see things on the high lines, and we see the things down to the future saying, this is interesting. This is kind of wondering where it's going to go. At number 5 is YMEG. It's had a solid return. The dividend is actually up, and it's below the trading average. So we're looking at that, and we've been saying that the Magnificent 7 has a chance to take off and do some decent numbers. So we're really focusing in hard on watching what that one's going. And when we're looking at it is it time to buy? Is it time to gonna fit? Is it right for us? At number 4, LFGY. It's good all around. It's got great total return. It's got a good solid dividend. And realistically, it's in that 1.5 return on investment program. I know that's above my 1 that I want, but another half a year, it could give me a nice solid return across the board. Number 3, CHIP. And that is the total return king. I mean, that is number 1 for total returns. And it looks like it's going to continue to be that way. Semiconductor chips are just going to be needed for everything. I mean, they're used all over the place. And this one here is buying and doing it right as an ETF. Dividends have been up. We're seeing an increased role in that dividends. That's where we use the dividend average to what we're getting paid for. And we see it week in, week out that we're starting to see some increases in dividends. Definitely something to watch for. Very strong piece. Next, SLTY. Now, I'm putting it straight out, guys. I'm not buying this one right now. What I'm doing is I'm watching the dropping of the price. I want to see how much lower SLTY is going to get. Is this thing going to continue to drop down? Will it be down to the $5 price range of ULTY? Is it going to be a $25 fund? We're keeping an eye on this one, and we want to see where it's going to go. Normally, we don't buy funds unless they're at least 3 to 6 months old. So we're still giving it some time. We're probably closer to a 6-month program, and we want to just continue to watch. Is this going to continue to drop, or is it going to stabilize? We don't know. That's why we got to give it time. It's got to get a track record, and it's got to get the publicity off that this is the newest fund and the hottest fund, and everything's going to be great again. But everything else it shows, it's giving great returns. Okay, it's giving us a nice return on investment. All the numbers are showing nice positives, except that it's dropping. And I don't want to buy something unless it's on, closeout price or at least a fair price. And I just think right now it's still too high. So keep that on there. And number one, of course, is ULTY. I now have to say, I thought I would never ever say this. I thought I'd never put these words into the screen, and that is ULTY as steady. Guys, I don't know what even to tell you. At a 1.36 dividend ratio, that's steady income. That is just that number's been like that for weeks on top of weeks. The price is finally steadied out. I know we're bouncing between that $5 and I'll say $5.30 to $5.60 range. So that's been steady. Dividends have been steady. Yeah, we're 9.5 cents average, and I know this week was down to about 9 cents, but we're right still in that steady par range. So I just look at this and say ULTY is now steady Freddy. It's just doing what we want it to do. So adding to your portfolio with ULTY is probably not a bad idea. We did this back, I almost want to say it was a month ago, that we did the review on ULTY, and the forecasting all said this. The forecasting said you're going to see a slight drop, and then it's going to come right back up, being the steady player with a slight increase. That's why we said we got to do another one on ULTY. I'm not trying to beat that horse to death, but I think this is an opportunity for our viewers and ourselves to make some real cash by investing into this properly. So our number one award goes to ULTY. It wins it for the week. And I hope you guys like this information, and it'll help you down the road.
Thank you for watching. Press the like button, hit the subscribe button, and join. Leave any comments below and join our Patreon to support the channel. I'm Doug, the Retirement Guy.